As of this moment, Oklo Inc. is trading at exactly 112.80 USD, marking a massive intraday jump of 15.21, or about 15.58% today. While most of the market is fixated on the raw percentage gain, the real story here is not just about a rising green line on your screen. The true narrative is the fact that we are seeing a fundamental shift in how advanced nuclear projects are funded, moving away from government subsidies and toward direct corporate backing from the largest tech companies on the planet. Most investors see this move and assume it is just another speculative pump in a high-beta sector, but the reality is that the deal with Meta Platforms has effectively turned a pre-revenue startup into a critical piece of national infrastructure for the intelligence age. This is the first time we have seen a hyperscaler not just sign a promise to buy power in the future, but actually put capital on the table to fund the pre-construction and fuel procurement for a project that is still years away from turning a wheel. There's a common belief that small modular reactor companies like Oklo are merely a playground for venture capital and that they lack the tangible progress needed to justify these triple-digit price tags. If you look at the chatter on platforms like Robinhood or SoFi Invest, the sentiment often splits between blind optimism and extreme skepticism regarding the timeline for actual power delivery. People look at the 2030 target for the first phase of the Ohio campus and think it is too far away to matter for the stock price today. However, the market is currently repricing the certainty of that timeline rather than the timeline itself. When Meta commits to a 1.2 gigawatt power campus, they are essentially de-risking the entire project in the eyes of other institutional lenders. It is no longer a question of whether there is a market for this energy. The market has already arrived with its checkbook open. If you've been watching the broader tech sector, specifically Nvidia stock, or even the recent movements in Apple stock and Tesla stock, you know that the bottleneck for artificial intelligence is no longer just the chips, it is the electricity. We are entering a phase where the ability to secure firm 24/7 baseload power is the only thing that will allow these companies to maintain their growth trajectories. This is why you see such intense interest in Oklo on professional platforms like Interactive Brokers and through specialized vehicles like Schwab Intelligent Portfolios. Investors are searching for the picks and shovels of the energy world, and Oklo has positioned themselves at the very front of that line by focusing on a design that is meant to be mass-produced rather than built as a one-off mega project. Recent trading volume has been staggering, with institutional activity picking up as the stock breaks through previous resistance levels. We saw a significant amount of volatility in late 2025, where the stock pulled back nearly 50% from its highs, leading many retail traders using the Robinhood app or SoFi trading platform to exit their positions in fear of a total collapse. But those who maintained their conviction saw that the underlying fundamentals were actually improving during that dip. The company has maintained a very strong balance sheet with nearly $1 billion in cash, which is almost unheard of for a company in this stage of development. This cash position, combined with the new prepayment structure from Meta, gives them a runway that extends well into the next decade. It is also worth noting the specific technical setup we are seeing today. The stock has reclaimed its 50-day moving average with high conviction, and the daily swings are being driven by a combination of short covering and genuine long-term accumulation. When a stock like this jumps 15% in a single session, it usually triggers a wave of algorithmic buying. You can see this reflected in the order flow on the Fidelity trading platform, where buy-to-sell ratios for OKLO have slanted heavily toward the buy side since the opening bell. This is not just retail hype, it is a recognition that the regulatory moat around nuclear energy is finally starting to work in favor of the innovators rather than just the incumbents. Let's get into what the company actually does, because it is often misunderstood. Oklo is not trying to build a traditional light water reactor like the ones we have used for the last 50 years. Instead, they are developing the Aurora powerhouse, which uses a fast fission design. The beauty of this approach is that it can run on recycled nuclear fuel, which addresses one of the biggest political hurdles for the industry: what to do with waste. By turning that waste into a fuel source, Oklo is creating a closed-loop system that is both more efficient and far easier to site than a massive traditional plant. Their business model is a build, own, operate setup. This means they are not selling the reactors themselves. They are selling the electricity. For a data center operator or a large industrial facility, this is a dream scenario because it removes the operational headache of running a nuclear site while providing the carbon-free, always-on power they need. The recent deal with the Department of Energy for a radioisotope pilot plant via their subsidiary, Atomic Alchemy, is another layer of the story that the market is only just beginning to price in. This expands their reach beyond just electricity and into the medical and research fields. It proves that the management team is thinking about multiple revenue streams even before the first reactor goes live. It also strengthens their relationship with the government, which is the ultimate gatekeeper in this industry. When you are trading through a fidelity brokerage or an individual brokerage account, you have to weigh these regulatory wins as heavily as you weigh the commercial ones. The path to 2027, which is when they aim to commission their first commercial-scale reactor at Idaho National Laboratory, looks much clearer today than it did even 3 months ago. However, we have to look at the other side of the coin. The reality of the nuclear industry is that it is notoriously slow and highly scrutinized. Even with the Advance Act providing a tailwind for faster licensing, the nuclear regulatory body is a deliberate body. Any delay in the assembly phase at the Idaho National Laboratory facility could send the stock back down as quickly as it rose. We've seen insider selling recently from the CEO and other executives, which can be a red flag for some investors. While these are often automatic sales for tax purposes or diversification, they do create a level of psychological pressure on the stock. If you are practicing self-investing or looking for investment help through various investing sites, you need to be aware that the volatility in OKLO will likely remain high for the foreseeable future. Before we move into the final outlook, I want to hear from you. Comment below how many shares of OKLO you currently hold, or if you are waiting for a pullback to enter a position. Do you think the connection to Sam Altman and the AI sector is enough to carry this stock to the $150 mark this year? Your insights help everyone in the community get a better sense of the sentiment on the ground. Looking forward, the catalysts for 2026 are already lined up. We are expecting the start of pre-construction and site characterization for the Ohio campus. We will also be watching for more details on the fuel fabrication facility. If Oklo can prove that they can handle the fuel logistics independently, it removes one of the biggest risks to their 2030 operational goal. The competition in the small modular reactor space is heating up, with companies like TerraPower and X Energy also making moves, but Oklo's head start in the licensing process gives them a distinct advantage. They have been engaging with the NRC since 2016, which is a longer track record than almost any other player in the advanced reactor space. For those managing their own portfolios through Fidelity Wealth Management or using tools like Fidelity ETFs and Fidelity Mutual Funds to gain broader sector exposure, OKLO represents the high-risk, high-reward satellite position. It is the type of stock that can define a portfolio's performance over a decade. The tension between the expectation of a nuclear renaissance and the reality of the engineering challenges ahead is where the profit is made. If the company continues to hit its milestones and secures more prepayment-style deals, the current valuation might actually look cheap in retrospect. But if they stumble on the regulatory front, the market will be unforgiving. As we wrap this up, the central insight is clear. The expectation was that Oklo would have to struggle for years to find the billions of dollars needed to build its first fleet. The reality is that the AI-driven demand for power has brought the capital to them. The market is no longer waiting for the reactors to be built, it is betting on the inevitability of the demand. We have seen a shift from a show-me story to a reserve my spot story, as evidenced by the Meta agreement. This transition is what has fueled the 15% move today and why the stock is being discussed in the same breath as major tech players. In summary, the 112.80 price point we are seeing today is a reflection of a de-risked future. We have moved past the era of pure speculation and into a phase of strategic execution. The contrast between the skeptics who see a pre-revenue company and the visionaries who see the future of the power grid is what creates this incredible volatility. Whether you are using Fidelity IRAs for long-term holds or a Robinhood app for shorter-term trades, the key is to watch the milestones, not just the headlines. The regulatory approvals, the fuel fabrication progress, and the site work in Ohio will be the real indicators of whether Oklo can bridge the gap from a promising design to a global energy leader. Stay focused on the data, ignore the noise of the daily swings, and keep a close eye on the institutional flow. This is a story that is just beginning to find